Actually, talking about FX volatility right now, I guess, and you're very much more in tune with the FX market, being the head of research. Are we just waiting now for the US election? What's your thoughts on what we're doing now? And maybe putting the spot a bit here, Chris, but what are you thinking in terms of what will happen to some of the markets? Or have you got any ideas, that might happen after the election, depending on, who knows what's going to happen? It's all over the place, isn't it, at the moment? But yeah, what's your thoughts on that?
Yeah, I mean, I think there's two debates. The first debate is whether it's contested or we actually get a straight outcome, and that outcome may take a few days. It may even take a couple of weeks before all those postal votes come in. But I think what we've seen straight away is the idea that Donald Trump's making it pretty clear that he's not going to take this one, that he believes there's an element, already saying there's an element of voter fraud, and he may take that to the Supreme Court. So the first question is, will he accept it? And, I think historically, when we've seen, I think the last time we saw a contested election was in 2000 between Gore and George W. Bush, and the S&P fell pretty hard, double-digit numbers, and I think we're already starting to see signs that may well be the case. If I go into the options market and have a look at the S&P term premium, you've seen implied volatility going up into November, and then it continues going higher and higher and higher, which tells me that the market is positioned in put options for something that's going to be pretty ugly after the election. Maybe people already hedged there. Maybe, the reality is if we get an outcome, you could get a relief rally regardless of who gets in power. We go into the second situation. So my first point is it going to be contested? Is there going to be some social uprising and is there going to be some ugly scenes which spill over into markets, or is there an outcome? And I think if we see an outcome, I think given what we're seeing in the options market, you could just see relief. S&P could rally, NASDAQ could rally. You could see, high beta currencies, rally, like the Aussie yen would do quite nicely in that situation. The other point then is once we've had a chance to settle down, we need to understand, who's in the White House. And then the makeup of Congress as well. So we're looking at, the Democrats are going to get the House. I mean, that's pretty much a done deal. I think they need to win 4 of 31 potential toss-up seats. So it's pretty much a done deal. And then the Senate as well. I mean, then that's kind of could go either way, 50-50. So we could feasibly see, the Democrats getting a clean sweep of all three, the White House and both chambers in Congress. That's a point of conjecture. And in my opinion, given that the world is magnetized to growth, they want fiscal spending. I think in that situation, you get massive deficit spending. I think you get Lael Brainard going in as US Treasury Secretary. Absolutely brilliant appointment if that's the case. And I think real yields go lower, US Treasury yields. I think the US dollar will fall in that situation because real yields have been driving the US dollar lower. I think gold goes much higher in that situation. And I think US stocks will probably like real yields lower in there. I know a lot of people are saying, no, Democrats represent tax hikes. They represent, regulation and all these other factors. But I think, given their ability to spend, people will be magnetized towards that growth. So I think, if we see a split Congress, which could happen, we could see the Republicans continue to take the Senate and the Democrats getting the House, then we're back at this kind of status quo and nothing's really going to get passed. And I think that's going to sort of put a handbrake on growth. So it really depends on the outcome. But I think the point of debate is this going to be contested? We could get ugly, or are we going to get an outcome? And I think that's really the big question we're asking now.
Yeah, it's uncertainty that people don't like, isn't it? I think the street and the city just hate uncertainty, no matter what it is. And when they can't extrapolate out, even if it's the worst thing in their mind, at least they can work out, hey, what's the scenario? Let's work out what X, Y, Z is going to do. But when you don't know, human beings, our mind goes wild. So yeah, it's interesting.
I'll tell you the other point as well. We go back to this point of managing risk. I mean, how do you price risk when we've been so poor at getting political outcomes right? I mean, we are given this mechanism by which we can price risk, which is the polls and the forecasting models of professional pollsters, and also betting markets. They were awful in Brexit. They were awful in 2016 election. And these are our mechanism for pricing risk. And if we can't price risk, how do you do it? So do you want to just absolutely stay out of the US election? Or do you want to have a look at what's happening in the vol structure and saying that this is expected to be a volatility event? But what we do is we price risk events. Are they going to be movement from the market, and what are the potential permutations? What could the outcomes mean for market assets? And when the rule book and the playbook and everything that we have gone for political events has been so poor for Brexit and US election, it just makes pricing risk for clients just really, really difficult. Makes it fun, but it also makes it very tough.
Yeah, and I guess from a retail perspective, we're in a luxurious position where we don't have to have any risk going into the election. We can choose. We can say, right, let me go into the election flat. Let me see what's happening. Let me see everything, the dust settles, and then come up with ideas. Whereas some of the bigger guys are forced to hold positions because that's just the nature of the beast. And then they've got to insure against those positions, whether they're buying put options or whatever it may be. So that is the beauty of being a retail trader, to be fair, isn't it?
I think when in the institutional world nowadays, the volatility as an asset class is so significant. People would rather than let's take equity markets for example, but rather than hold an equity and go to cash into that, they'll just hedge themselves by buying put options or various vol structures that you could have. Buying volatility structures like collars, for example. You could sell. Take premium, but you could hedge yourself by buying a put option down below, or you generally do it through optionality and other derivatives and stuff like that. But vol is is the mechanism which being long volatility is effectively the best way to hedge yourself against these events in the institutional world. We would tend to look at it and reduce our exposure or keep that exposure, but for these guys, they tend to have their core exposure. They just tend to look at various derivative products to look to hedge their exposure. And obviously you see the costs of those exposures increasing into big potential volatility events, but that's what they tend to do. They don't tend to go to cash. They just have ways of maximizing, and capturing downside risk. But at the end of the day, people have learned so much about what's been happening, and that is that we've got a central bank put from the Fed, which is where the strike price is significantly higher these days than, and after what we saw from September, they've pretty much said that they will foster easier financial conditions, which means that if we get any pullback from the election, it becomes a vol event, and we see equity markets down, credit spreads widening, and the US dollar rallying. They're just going to come in and flood the world with liquidity and try and ease financial conditions. So I think that's really what we're looking at is that, how long will the volatility last? And when we're looking at something like this, you've got three stages in an event: how markets trade into the event, how markets trade around that crazy period once the exit polls close, and going forward into actually get an event until we get an outcome, whether it's accepted by Donald Trump or Biden. And then the stage three, once we've gone through that crazy period of liquidity and stops and all that crazy stuff going on, is the fact, the reality, and then what happens afterwards. You go to 2016, everyone thought, there was people out there who thought Donald Trump would win. Not everyone thought Hillary Clinton was going to win, but people thought that Trump would win. But how many of those people thought, well, if Donald Trump wins, we're going to see the S&P futures going limit up on that day? Yeah. People got the right president, but then they thought that the world was going to collapse once, and that was obviously the wrong situation. So in that period, that 24 hours around the election, that's where I would be staying out personally. I think the easy money is made going into the election, and then the third stage, which is the after the election. And we can apply that concept for all big marquee tier one events, be it Brexit and all those sort of political events as well.
Yeah, no, it'd be interesting actually. I've got it in my calendar. I would like to have an all-nighter just to see what's going on, because I remember when Trump got in, the market it started to realise it was going to get in. Market was falling, and then all of a sudden just went bang, didn't it? It was like someone just put the throttle down and it just went and just absolutely rocketed. But
we don't have much, going for us in Asia in terms of markets wise. Most of the stuff comes out through late European into US trade. But when we get these big political events, they tend to come out through Asia, and we can, sit at our desks, whereas you guys are sort of pulling all-nighters. I think that's probably one of the few times when we get these US political events and also Brexit as well. A lot of the stuff happened overnight that we can sort of sit there in normal godly hours, whereas you people are out sort of 24-hour nighters.